Hey everybody, Spartan here from SpartanTrading.com. I wanted to talk to you guys a little bit about some trading basics, and in particular, one question that I get quite a little bit is, what is an ETF? Now, what is an ETF? An ETF is an exchange traded fund. So what is that exactly? It's a collection of securities, for instance, stocks that trade in an underlying index. So if you think about a sector like, let's say, technology, if you want to have exposure to that entire sector, you can go after a technology ETF, which would be a collection of stocks, technology stocks, that would allow you to have that exposure without buying those individual names. So it gives you the opportunity to have exposure to an entire sector without having to go after individual names. So it's a great tool for investors that are looking to buy certain sectors, get exposure to certain sectors without having to do due diligence on every single name. The great thing about that is it's cheaper to obviously buy and sell the ETF rather than the individual names, and it's a lot easier to manage. So there are different types of ETFs. There's bond ETFs, there's industry ETFs, which is kind of what I've been talking about, commodity ETFs like gold and oil, currency ETFs for Euro, USD, and inverse ETFs. And what an inverse ETF would be the opposite of, let's say, a market ETF. If the market's going up, you could just buy that market ETF. But if you wanted to play the market to the downside as it's breaking support, you could go after an inverse ETF, inverse to the SPY, which would be the general market ETF, and play that to the long side. So there are different types of ETFs. I think the most common ones that people do buy are the industry ETFs and probably the commodity and inverse ETFs, because they want to get exposure to gold, oil, or etc. So here's a list of some common ETFs for you guys: general market, SPY, QQQ, and the way that you can use these, obviously once you build a watch list of these ETFs, is if you want to buy certain sectors, you would just put this into your broker, SPY, QQQ, type it as a ticker symbol, it's going to pop up the ETF, and you can buy and sell it like a stock. Very easy. It's usually cheaper to buy than a security as well, individual security company name. So general market ETFs: SPY, QQQ, technology, XLK, financial, XLF, KRNE, small cap, IWN, emerging markets, EEM, oil, USO, XBO, gold, GLD, IAU. Some basic common ETFs, very popular. These ones are always liquid, so easy to get in and out, not a lot of spread between the bid and the ask, etc. And usually every single broker should have these ones at a discount in terms of the commissions that you would pay to go in and out. So going back to kind of the benefits of ETFs, just real quickly: ability to buy exposure to an industry at a low cost, cheaper than mutual funds, so no management fees. So if you guys do have money in mutual funds and you kind of want to take the money out because the management fees are taking a lot from those compounding gains, then you could look at just general market ETFs as a way to invest over the long period of time. Lastly, it's easier to manage than a basket of stocks. So, if you wanted to have exposure to the entire market, you would have to have a lot of different individual names rather than just buying the SPY. So it's a lot easier. Anyways, that's what I wanted to talk to you guys about today. If you guys do have questions on any of this stuff, feel free to give me an email at spartantrading.com, or you can send us a message at the Contact Us page. Thanks for watching, and have a great day.